All right, a couple things here. Yesterday I did this this ON Semiconductor or ON Semiconductor. And the reason why is because we could be breaking this pretty clear support here, right down around the $61 level. And I think that people take this stuff for granted when it comes to technical analysis. I mean, think about it. This is a company that's worth, how many billions and billions and billions of dollars. And if we go back all the way to August of 22, so we're talking like, 2.5 years almost, every time it's gone down to this $61 level, what has happened? It found support and it rallied. This is what we call market memory. Sometimes a price that's important can be important for a long time. And, it's almost like if I didn't look at a chart, I wouldn't even believe it. If someone said to me, well, hey, every time the stock got down to $61 for the last 2.5 years, it found support and it rallied. But charts don't lie. And people spend a lot of time talking about, like when I was in business school, all we heard about was like efficient market, the market follows a random path and all this garbage. If markets were efficient, every price level would have the same importance. There would be no such thing as a support level or a resistance level. But as you can see, every time we've gone down to 61, we found support. If a market's people, I think, overthink technical analysis. It's really just the study of supply and demand, right? If a market is trending lower, why is that happening? Well, it's happening because there's not enough demand. There's not enough buyers, demand and buyers. It's the same thing. So if you're a seller, what do you have to do? You have to offer your shares out at a discount to get the buyers off the sidelines, to draw them into the market. But when you get to a support level, all of a sudden the dynamic changes. There is enough demand. Sellers can sell all they want without having to worry about pushing the price lower. And sometimes when you get to support, what happens? You rally. And that's because, some of the people that want to buy start thinking, I can sense there are other buyers coming into the market here. I know the sellers are going to go to whoever is willing to pay the highest price. So I better increase the price I'm willing to pay. Other people do the same thing. They say, hey, that guy's willing to pay a higher price. I don't want the sellers to go to him. I don't want to miss out. So I'm going to increase the price I'm willing to pay. And you get this like snowball effect, a bidding war. And this drives the price higher. So a lot of times you get to support, the price moves higher. And you can see that right here. Now, the reason why this was the stock of the day yesterday is because it looks like the support has finally, after 2.5 years, been broken. When we say support breaks, this means that the stock trades lower than the support level. And it's not just a symbolic thing. It tells us that, the buyers who created this support with their buy orders, or the traders and investors who created the support with their buy orders, are out of the way. Maybe they finished their orders, maybe they canceled their orders. Regardless, they're out of the way. So now, once again, the sellers may be forced to push the price lower in order to get the interest of buyers. So support breaking means there's a good chance that the thing is going to go lower because the support is breaking. But I think what I'm really trying to say is people overcomplicate this stuff. Technical analysis, if you do it right, it's really just a study of supply and demand. And it doesn't matter what market it is. It could be the stock market, the market, the bond market, the housing market,
Bitcoin market,
anything. Yeah. If there's not enough demand, sellers have to push the price lower. And of course, it's the opposite when something is going up. There's not enough supply, so the buyers have to take the price higher. So I think that this is pretty interesting thing. It's on my radar screen here for a move lower. It's trading down again this morning. So I think there could be something here to do on the short side, meaning buying puts. I tell people I don't think it makes sense to short stocks. I've never shorted a stock in my life. I have in my institutional world, but not for my, myself. You're much better off just buying puts, because if you're wrong, well, the most you can lose is what you put in, how much money you put into your puts. If you actually shorted the stock and you're wrong, like say ON gets taken over tomorrow at $100 a share and you're short the stock, well, you're going to have an issue.
Yeah, absolutely. Mark, I'm glad that you said that too, because this is actually one of the things that I kind of picked up. I'm not a CMT. I'm self-taught, and I picked up that, hey, I don't necessarily have a risk appetite for a hypothetical unlimited risk by shorting a stock. And in your example there of buying puts, your risk is defined ahead of time. That makes a lot more sense to me. That's also how I capture those things.